Welcome back. Joining us now on the show is Sushant Gupta, director at, Wood Mackenzie. Sushant, hi, thank you so much for joining us. And it has been a roller coaster ride, really, for crude oil, with various statements, datas, and numbers flowing in on what the demand and supply this year could look like. I want to first of all start with supply, and there are various reports suggesting that the second quarter of this year could be looking at a surplus. How are you looking at the OPEC supply cuts and the non-OPEC production?
Yeah, so I think, like as always, markets are really grappling between the fundamental sentiments and geopolitics and obviously OPEC plus policy. In terms of supply, we are currently forecasting overall growth for this year to be in the range of 1.3 million barrels per day, year-on-year change. A large part of this is driven by non-OPEC growth coming from US, Brazil, Guyana, Norway, adding to that, close to around more than 1 million barrels per day of growth. Now, for the OPEC Plus, we've assumed, with the recent announcement that they will continue to roll over the production cuts to Q2. So we assume that assumption, and also that it's less likely that they will be able to bring all the volumes back in the market for this year.
So, Shant, how's the demand looking like then? So, Shant, how's the global demand looking like?
Hi. So for the global demand, we are forecasting at the moment about 1.9 million barrels per day of growth, which obviously is higher than the 1.3 supply growth we're talking about. So we expect a large part of this tightness between supply and demand to emerge in the Q2, Q3. So, currently we are, advising our clients that prices can appreciate in Q2, Q3 from the current levels.
And how much of an appreciation in prices are you anticipating? Because a lot of reports do suggest that the second and the third quarter could be higher to the north of $90.
We are we are forecasting the prices could appreciate to $90 by end of Q3. But obviously, we do not expect higher prices, because we also have to remember that there is spare capacity from OPEC. Now, any prices which are higher than $90 a barrel could potentially have an impact on the economic growth, which is still fragile. And OPEC plus could bring more production back in the market. So let's not forget that spare capacity which is available within OPEC to bring the market. So we don't expect the prices to go beyond 90, but yes, from where we are today, we expect prices to appreciate towards $90 a barrel.
When we talk specifically about the Asian demand going forward, Sushant, what's your sense on that? Because the Chinese National Congress meeting has come and gone without a very concrete plan on paper there. How are you looking at the Chinese demand? And more importantly, how is the Indian demand looking from here on?
Yeah, so out of the 1.9 million barrels per day we talked about, right? Asia is the growth center, right? Out of 1.9, 1.3 comes from Asia Pacific this year. Now, there's a bit of a change in our view from last year. China accounted for close to around 0.9 million barrels per day of growth last year, right? This year we're forecasting China to grow around 0.5. So slowdown in China compared to last year, but the composition of the demand growth in China is more driven by jet fuel and petchems this year. So which we still expect to come on, for this year. For India, we expect roughly about 200,000 barrels per day of demand growth, quite robust compared to last year's demand growth we saw in India. Apart from China, India, Southeast Asia accounts for also a decent amount of growth, particularly Indonesia, Vietnam, and Thailand. And the Singapore bunker market is also supportive because of the Red Sea crisis, which is actually adding to the bunker demand, with the ships have to travel a longer distance via the Cape of Good Hope.
So, Shant, also, how are you looking at the investments within the fossil fuels with all the debate of decarbonization going around and the expectation that we are slightly still far away from that peaking of demand?
Well, I think so. So when we talk about peak demand, right? So we have around, say, 101 million barrels per day of demand growth today, right? Now, in our numbers, we peak at around 108 million barrels per day in the early 2030s. We still have around 7 million barrels per day of demand growth left in the market, in our view. Now, within that 7 million barrels per day of demand growth, if you look at the sector-wise growth, we see the transport sector demand peaks by 2027, which is like, gasoline plus diesel demand peaking by 2027 at a global level. And if you go a bit further down, China's demand, for gasoline peaks by next year. So I think there are different peaks for different sectors. We see going forward, most of the demand growth will come from petrochemical sector, and the transport sector, will peak in many parts of the world.
All right.
Right. Thank you, Sushant, for joining in. Thank you, Manisha, for taking us through with that conversation. And as you guys spoke, the markets continued to sell off, especially in the mid-cap end of things, down 800 points for the mid-cap index. So what we'll do is take a short break, come back, focus more on a lot of the stock-specific action. Stay tuned.